Yo, what's going on, everybody? Welcome back to the channel. I wanted to talk to you guys today about Black Swan events and looking at the overall larger picture when it comes to market manias, crashes, periods of euphoria, and kind of put things in perspective on a visual chart. So we're going to review a really quick list of the different black swan events that significantly impacted the stock market. And we're also going to look at a panic chart as well to see how that fared on top of that map and where we are today and what we can expect next year. Now, I'm a big fan of patience and buying stocks when they go on sale. Typically, if you think about like the S&P 500, for example, that has always gone up except for a period of about 10 years where it dipped and it took about 10 years to recover. And since then, it's just been going up. Now, I'm not saying we're going to be expecting another 10-year um, recession or 10-year market downtrend, but I'm wanting to prepare you and myself to have funds readily available when we do have a black swan event, because one of my videos coming up later in the future are going to detail some of the companies that endured the COVID drop and then recovered 10x from there. And all of that data of the dip and where it was going to fall was charted out right in front of me. So the thing that I could have done to prepare myself in advance could have been setting up some limit buy orders on that support, watching them much more closely. In the days leading up to the large dip, it didn't just happen in one day, it happened over a span of about 3 weeks to a month. That would have been the time to take advantage and really deploy a bunch of cash. So, in a video coming out in the short future, we could have, we'll go over that and then we'll show what we could have done to capture those opportunities, basically. So, without further ado, let's just jump into the main Black Swan events, and then I will overlay them on top of a chart that goes back to the 1800s, 1900s, and how that predictor has called out these certain events. So, we're not going to go through in great detail for each, but we'll just go down this list and then we'll look at the periods of panic chart by George Tritch. So, we have the Great Depression in 1929, World War II from 39 to 45, the oil crisis in 1973, Black Monday in 87. There was an Asian financial crisis in 1997, the dot-com bubble, everyone knows that, Y2K, 2000, the global financial crisis, the GFC, when housing just decimated everybody. They were giving out loans to people who were not qualified. And then we have the COVID pandemic, which was the latest, 2020. Now, I'm going to go ahead and just pop this up really quick. I'm going to take a drink. Okay. Excuse me. So, again, the Great Depression, periods of panic, had this at 1927. World War II was from 42 to 45, panic. The oil crisis of 73 was in a period where, if we look at 1969 to 1972, that was when hard times turned to good times. 72 was from good times going back down to hard times. So the hard times did capture the oil crisis of 73. The Black Monday event in 87 was in the middle of 85 going to 89. From the hard times to the good times, 87 was a speed bump. That Black Monday was a speed bump. I believe the market fell 20% that day. Moving on to the dot-com bubble, that was 2000, but this was 1 year early, 1999. Going down to the great financial crisis, from the years of good times down to the years of hard times. 2007 to 2012 captured this perfectly. I believe the great financial crisis was 2008 to 2012. Let's just see. 2007 to 2008. It bottomed in 2012. So that was captured on the way down. And then, as many of you know, COVID happened in 2019. I believe 2020 was when it really ramped up, but I think COVID itself was announced. There was a virus going around in 2019. Let's just double check. It says 2020 here. Um, First COVID case year. Let's just see really quick. I thought it was 2019. Yeah, COVID-19, 2019. Duh, I'm stupid. Cool. It's called COVID-19 for a reason. So COVID, uh, again, that was the latest. And now, today, this is where we're at. 2023 to 2026 was years of hard times to years of good times, 2026. So we're in 2025 now. 2026 is next year. If we look at the next leg, it's going to be 2026 to 2032. That's 6 years. Think about what's happening today that will impact the year 2026. So, looking at what's going on today, we have Trump as in president. He's the president. Um, we have record national debt. They are making significant cuts across the board in terms of government spending. Look at USAID. And I think what we're going to see is all of that debt that needs to be paid off. Trump and everybody else does not want to pay that debt off in at 6-7% interest rates. They want to be paying that debt off low. They want to make those payments as small as possible. So from 2026 to 2032, I do think we will see some type of overall market consolidation with potential speed bumps on the way down. Now, I don't think it's going to be one U-shaped, I guess, recovery from 2026 to 2032. I think it's going to be a long, drawn out um, years of events of, some companies and some sectors will do really well. I think we're anticipating that oil is going to do well. Um, I think rates will come down. I think that's a goal of the current administration. But at the same time, to get rates to go down, there has to be some type of pressure. So, 2026 to 2032, it's going to be years of good times down to years of hard times. And the years of hard times are low prices and a good time to buy stocks, corner lots, goods, etc. And hold till the boom reaches the years of good times and unload. So, 2026 to 2032, expect probably, for myself personally, that's just going to be years of accumulation. I'm at that phase of my life, and I think a lot of my viewers um, are at that phase as well, where they can accumulate companies that are going to be going on sale. Now, you don't want companies that are um, de-risking, slowing growth, slowing earnings per share. You want companies that are still killing it, but being punished by the market or being totally misread by Wall Street. So you want the companies that Wall Street are getting wrong. You want companies that are continuing to grow, add to earnings per share, growing revenues, increasing margins, increasing profitability from 2026 to 2032. And then I think we get to a market euphoria 2032 to 2034, 2035 before we have a huge panic again. So we've got some time. And I think what we're going to see for this year, I think we'll see another wave of euphoria going into the end of this year. I think that'll be the markets. I think it'll be Bitcoin, the cryptocurrency markets. And I think we'll get a blow off top, and then everybody likely will just be euphoric, and then big money is going to sell into that rush, and then we're just going to see a slow descent of the market, and crypto is going to probably bottom again around 70s. I think Bitcoin could go to 218 to 253,000 during that euphoric time. Every 4 years there's a halving, and then 1 year and a half, 1 year 7 months after, there is a euphoric move. October, November, December of this year is that euphoric move. I think markets will move with it as well. We'll get that blow off top. And then I think 26 to 2032 is going to be a year of just accumulating, refinancing your rates and just preparing, build up that stash for the Black Swan event, because there were so many companies that have returned 10x, and these are big companies that have returned 10x, or they are high dividend producing companies that are profitable and are doing very well. So excited to go over those with you guys. I'll probably make it my next video or the next two videos. So just wanted to bring this up. Always have some type of cash on hand for emergency or a Black Swan event. So if you guys made it this far, I appreciate you for watching. Take care, and I'll see you in the next one.